name is Alex, and I'm an investor who has this YouTube channel where I talk about finance and economics. In this video, I'm going to be talking about Bitcoin. Bitcoin has a recent bout of volatility lately, so I'm going to be talking about that, and I'm going to be talking about why Peter Schiff is completely wrong in his analysis of Bitcoin. I watch his podcast, and he talks about Bitcoin in his past two podcasts, and he's just been completely wrong. I am a big fan of Peter Schiff, so this is coming from love. So as I mentioned, Bitcoin has been in the news because it hit an all-time high on some of the exchanges last week. And the reason why that happened is because there's Chinese investors who want to get out of the yuan, and in order to do that, they changed their yuan into Bitcoin, and then they changed the Bitcoin into dollars. So they want to get out of the yuan. And it's not easy to get out because there's capital controls. There's about $50 to $60 billion in outflows out of China because the Chinese economy is not doing well. Their GDP growth has been slowing, and there's a lot of debt in their state-sponsored entities, and so their economy is weak. Their yuan is actually declining versus the dollar. That's another reason why Bitcoin has been increasing, because the yuan has been devaluing. So those are some of the reasons why Bitcoin has been going up last year. If you look at, there's a website that shows the amount of trading that's in Bitcoin in all currencies, and it's above 95% with the Chinese yuan, so you know that's what's driving it. Another possibility is speculation. China is known for speculation. China has Macau, which is the #1 gambling site, and then also there has been speculation in stocks, real estate, commodities. So the Chinese people love to speculate, so that might be part of it. They see Bitcoin going up and they speculate more in it. The reason why it went down was twofold. It went down from about 1,100 down to the mid 800s, and the reason why it went down is twofold. One is because the Chinese yuan, it increased 2.5% on the offshore Hong Kong exchange, which was a high amount. The reason why it increased might be because of interference with the government. The government saw the yuan constantly being devalued, so it stepped into the market and boosted the price. And since all the traders were leaning short, it really had a big boost on the price for a couple of days. The second reason why Bitcoin went down is because Chinese government has been met with a bunch of the leaders of the Bitcoin exchanges, and they kind of were saying we might crack down on you a little bit. So that cut the speculation. I don't think that they're going to be able to crack down on Bitcoin too much, especially since they want to be free market, more free market country. But that kind of language knocked the price down. Governments love to do this. China did it great with yuan, and then did it with Bitcoin. It's kind of like a forward guidance in a sense, or where they talk the price down. We saw the same thing with OPEC, where they would talk about possibly cutting oil prices, and then oil prices would go up on that, where they just talk and it affects the price. So that's why Bitcoin went down. Now I'm going to get into why Peter Schiff is completely wrong about Bitcoin. So Peter Schiff hasn't really been talking too much about Bitcoin in his entire life. He has a podcast that I listen to, and I enjoy his podcast. But in the past two podcasts, he's talked about Bitcoin, and he talked about it going up so much and that it might be a good time to sell it. Well, he was actually pretty correct on the timing of selling it, but he was wrong on the sentiment. He thinks that Bitcoin is a bubble, like the tulip bubble. He thinks there's nothing backing it and it's completely a farce, and he thinks that you have to invest in gold. And he's biased because he sells his gold through gold money. He makes the commission on that. So I understand he's biased, but being against Bitcoin is completely wrong. And he talked about how he was right, how Bitcoin did go down about $200. But that doesn't mean anything. Just because it went up too fast and coming back down doesn't mean the whole thing is a farce. It's just volatility that's happening for a new currency. The market cap of Bitcoin is at $14.6 billion, so it's like a mid-cap company. And if you see a mid-cap stock that reports bad earnings, it could go down quickly. Now Bitcoin went down about 25% at one point, but it rebounded back above $900. It seems to be a little bit less volatile than last time. When it went to its all-time record high, it went in 2013. It increased in an even shorter period of time and decreased faster. So it looks like the volatility could be declining a little bit. But getting into Bitcoin, Peter Schiff doesn't understand the technology in Bitcoin and how you could use it properly. The big difference between Bitcoin and gold is that Bitcoin is more secure than gold, actually. And the reason for that is because you have to store your gold somewhere, and in order to secure it, you have to pay somebody. So that's one level. Also, in 1933, FDR confiscated gold. That's another point to take into consideration. With Bitcoin, you could secure it on a hard wallet, which is not connected to the internet, called Trezor. It's an open source project that only costs $99, and you could store all your Bitcoin private keys. And if that's stolen, nobody could get into it because it doesn't even use a password. It's called a mnemonic code, which it has 12, 18, or 24 words, and those words are used as a password. So what hacking people do is they do key logging, where they can hack into a password that way. So that is not able to be hacked with this type of password that Trezor uses. So you don't have to pay anybody to store it, and the government can't collect your Bitcoin the way it collected gold in the past, because they don't even know you have it because it's anonymous. So the government can't get it from you. It's not possible to be stolen. And Peter Schiff was saying, oh, you can't use those Bitcoin. You could actually use Bitcoin in your Coinbase wallet. You could transfer it from your Trezor to your Coinbase wallet, your digital wallet, and you could use it that way. Peter Schiff is talking about his gold money program that he's using. It's kind of outdated the way I look at it. He's using gold as a debit card, but you're still relying on gold money to work. And I looked at the reviews on goldmoney.com's reviews, and they were saying that sometimes the website doesn't work. So you're relying on the website to work. I think that Coinbase would be more reliable, especially since there's so much competition. There's Coinbase, Circle, and all these companies want to make good on their promises to have a secure hot wallet because it's connected to the internet as a hot wallet. They want to be secure because of what happened with Mt. Gox a few years ago, which was hacked and they lost the Bitcoin. So I think I would rely more on these digital wallets than gold money. I'm not saying gold is not a good investment to secure your value, but I think that Bitcoin has a lot of advantages that Peter Schiff doesn't like to talk about because he doesn't make a commission on Bitcoin and he makes a commission on gold. Another big point about gold and how Bitcoin is better than gold is that when gold prices go up, more gold is mined. Bitcoin will be 21 million unless enough people vote to fork or make a change in the code of the Bitcoin and make more than 21 million. But in all likelihood, people using Bitcoin wouldn't vote to use more than 21 million. They're going to keep the 21 million. So it's very likely that 21 million is the amount of Bitcoin that's going to be available, while gold varies in the amount. I know that there's only a certain amount of gold in the world, but more gold is mined when the price goes up, so that changes things. Another factor is that gold is used for jewelry and industrial demand, while somebody who says gold is so great would say, oh, it has a value too. But I think that's a negative because the demand for gold is changed by styles in jewelry. Maybe people don't want gold, they want platinum, maybe they want silver. Gold will always be used, but the amount of demand changes based on the styles. the industrial demand changes too, because maybe a company doesn't need gold for specific industrial demand, or the industry changes what they want to use. There's a lot of different factors that go into it, and that changes the demand for gold. While Bitcoin is only going to be changed by people's demand to use it as a currency. I have two more points. One is that people in gold say that, oh, Bitcoin goes up and down too much. But gold goes up and down a lot too. Gold has done nothing in previous decades that had done nothing for a while. In fact, in about 1980, gold hit $700, and then it took all the way until 2007 to get back to $700. So that's long-term loss of value. While Bitcoin has corrected really quickly, it's also rebounded it to that as more people use the technology and get involved with Bitcoin. So I think that in terms of usage, that's a long-term trend which could benefit the price of Bitcoin. I'm not necessarily advocating using Bitcoin, buying all this Bitcoin to be a millionaire in the future. But I think it's a great store of value and it has advantages over gold. One other point I want to make is the 51% attack on Bitcoin, which would be able to hurt Bitcoin. That would be if 51% control of the hash rate of Bitcoin was controlled by one entity, then they could do two things. They could reverse transactions and they could stop transactions. And that could hurt the confidence in Bitcoin, and people might take their money out of Bitcoin and the price would go down, even though this 51% attack wouldn't necessarily destroy it in any way, necessarily, but it could hurt confidence. And I think that the only way 51% would control the hash rate is if they were in a mining pool. And mining pool is a group of miners that mine Bitcoin by solving the formula to get transactions approved. So I think that mining pools are the only way for a 51% attack to possibly happen. However, if I was in a mining pool and I saw it coming close to 51%, I would get out of that mining pool and just go in a different mining pool. What would be the difference? I wouldn't want to risk the Bitcoins that I've mined, and because all the miners have Bitcoin, they don't want the system to fail. They don't want to come close to 51%. So they should just go into a different mine. The advantages of mining, one of them is a more consistent payout and economies of scale. So there's some advantages to being in a mining pool instead of mining on your own. But you could just go into a different pool, or another pool could compete with them. I don't think that a 51% attack is likely. This is just some of my thoughts on why Peter Schiff is wrong about Bitcoin. A lot of it is age. He's kind of old. He's not up on the new technology, and he's not aware of digital of hard wallets like Trezor that really make Bitcoin very secure and easy to use. And there are constantly people developing with Bitcoin to make it better and more accessible. It's already easily divisible. It's already easy to hold. It already will maintain its value because it's only 21 million created. There are a lot of advantages to Bitcoin, but it's still growing and it's still in its early stages, and Peter Schiff doesn't understand that. This was kind of a video that I made without having any notes, so see if you like that. If you don't like it, then I'll have to make notes. But thanks for watching. Please subscribe if you like the video, and that's it really. Peace.